Some stories are just too good to be true. And that's how I feel about the possibility of a federal proclamation that leads to a nationwide rollout of fully self-driving cars. Tesla stock was up again today because we're getting reports that President-elect Trump, who is an avowed climate change denier, has cast his lot with Elon Musk to develop national self-driving vehicles. It's pretty clear that Trump doesn't see the need for electrics. In fact, he wants to end any subsidies, including tax credits for manufacturing them. However, he did state, I'm going to quote here, "I'm for electric cars. I have to be, because you know Elon endorsed me very strongly," end quote. A little transactional for me. Look, I'm not against owning a Tesla. You know that. I just think that this is a bad reason. Elon Musk tells a very compelling story about full self-driving, as well as solar robots, all wrapped up into one stock of a company that happens to make vehicles. But the idea that the White House can somehow allow self-driving cars everywhere with the stroke of a pen, that's just plain fanciful. First, our country simply doesn't work like that. We have state and local governments with tremendous power to block anything. I remember when I was going to be able to take a self-driving taxi from downtown Phoenix to Glendale, the home of the Arizona Cardinals, a couple years ago for the Super Bowl. It seemed so simple, except Glendale didn't allow self-driving vehicles. I was incredulous, but the municipal government of Glendale was able to block us. Second, you might think it's natural for Trump to just declare the federal interstate highway system a self-driving zone. But you know what? That's meaningless, too. Think about it. How do you get on the interstate highway system? Other than a few municipalities that may be designated on some map someday, it's catch as catch can. The feds can't control state or local self-driving laws. If they try it, those municipalities will sue the Federal Highway Administration, and they're going to win. There was another time in this country when a president might have been able to do something about this. In the 1950s, President Eisenhower planned and executed the interstate highway system. But he did that for national defense reasons. In those days, we had a Cold War with the Soviet Union as an overarching imperative in our nation, which made the Interstate Highway Act a much easier sell. Still, I like the concept that there's what Barclays calls an Elon premium. To me, Tesla deserves the premium. Musk has no doubt influenced the president-elect to scrap the $7,500 clean vehicle credit, which will make it much harder for legacy automakers to ever compete with Tesla. We're going to hear from Ford and GM CFO at a conference on Wednesday, and we'll learn how their electric divisions can handle the end of those tax credits. I believe GM can handle it, but Ford, well, they may be stuck in neutral waiting for the warranty issues to dissipate, if they ever can. In the end, while I don't buy the national self-driving mandate, I think nothing truly dulls the case for owning Tesla. The Musk premium will work its magic in other ways, perhaps favorable municipalities and Tesla rentals next to federal highways. No matter what, though, always remember that Tesla's a tech company. The others are automakers. And a tech company can get an insanely high price-to-earnings multiple with no one blinking so much as an eye about it.
What matters more here?
I mean, the whole story is about gross margins. I mean, that's really been the headwind on Tesla stock. I'd say $30 to $40 of a headwind to the stock. You saw gross margins. I mean, this is a blowout. Not even us thought that we could see a gross margin, but essentially is anywhere from a 200 to 300 bit beat. This shows price cuts now under control. Margins start to tick back up. You start to get now toward 20% gross margins. I think this is the start of the stock. Ultimately, this will have a 3 in front of it as a stock as the gross margins start to trend up, and as well as growth into next year from a delivery perspective.
So does the robo-taxi stuff matter?
Look, I think longer term, we think the longer term story here is autonomous, is robotics, is essentially the AI play. Street, what they needed to see here, show me margins. You cannot have margins going toward 13, 14%. Now that margins are starting to level off, that is so important, not just from a cash flow perspective, but showing the worst is in the rearview mirror. And when you think about all the bears and all the negatives, it comes down to deliveries will start to uptick. China, I think, is a source of strength in the quarter. But that gross margin, it's a Goldilocks for any bear. Okay, it's a Goldilocks for any bull. The bears, it's kind of a nightmare for, because that was ultimately the core of the story.
Yeah, to your point, free cash flow, $2.74 billion. That trounced expectations for Q3. But some of the details we're getting here on the outlook, I think, are also really notable. They're basically saying, despite the ongoing macroeconomic conditions, we expect to achieve slight growth in vehicle deliveries in 2024. Also talking about energy storage deployments that are going to more than double this year. But perhaps this is most notable because I know you've written about this, saying plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. What should we take away from that when I know a lot of folks have been looking for a sub $30,000 vehicle? We're even expecting to get some details on that at the Robotaxi event, which maybe was unrealistic.
The linchpin to the story from a growth is a sub 30K vehicle. And I believe that that hits by middle of 2025. That's the growth. I mean, that's ultimately, you're talking about like single digit growth this year. That's how you get to 10, 12, 15% type growth. Margins under control. That's what the bulls want to see. And I think the fact that they actually doubled down on, and I expect clearly on the conference call, they'll focus not just on margins, but more details around that vehicle. Look, Robotaxi Day, we could argue, you know, many would say that they're disappointed. I believe ultimately that shows the vision, the autonomous and the AI vision. Street need to ultimately see, stop talking the talk, walk the walk, show the margins, they did it. And Musk really has, I think, stepped up in that capacity.
In what's been a year of softness for EV demand and obviously more adoption of hybrid vehicles, for example, are we going to look at Q3 as an inflection point for that changing, especially when you look at results like this today? Or is this a Tesla-specific story as they do deploy more manufacturing techniques, more software, more AI, both internally and externally?
I think it's a combination. I mean, you look at GM's quarter. I mean, that was a Juan Soto-like quarter for GM. And then you look at what we've seen in terms of Tesla. I believe this is the inflection point. This right now is the start, to me, of what we're actually starting to see from a gross margin perspective. The renaissance of growth come back. They've essentially been in between two growth waves. Next year, you have a sub 30K vehicle. Then the autonomous and AI vision plays out. And that's, in our opinion, that's how you get to trillion and a half market cap. And right now, as we've seen, like, look, New York City cab drivers bearish on Tesla.
Okay.
And I think that's a good setup relative to what we see in the next 3-4 quarters.
Listen, we got to go, but quickly, Palantir, your reaction to that news?
I mean, that's huge. It just shows doubling down on Carp and Palantir on the defense side. When you think AI in the 202 area code, Palantir really owns that market. The fact that that partnership, just like Microsoft and others, we'll hear more in your interview tomorrow, that's a huge flex the muscles for Palantir and Carp.